Welcome back, Focus Learners. Let's just jump right into it. Today, we're diving into a brilliant explainer on the methodology of Chiruka Wirakati, specifically looking at the ultimate goal for absolutely anyone participating in the financial markets, finding peace and securing consistent success. Now, if you've ever stared at a flashing screen and felt your heart rate just completely spike, you know exactly what I mean. And this is exactly where you need to be. We are going to unpack the core concepts of mastering both the internal psychological landscape and the external technical reality of trading.
So what is the secret to stress-free trading? It's the million-dollar question, isn't it? For the vast majority of retail traders, navigating the chaotic, totally unpredictable waves of the market feels like an endless struggle. I mean, it's a high-stakes environment where literally one wrong click can cost you dearly. But what if the secret isn't some magical algorithm or a whispered insider tip? What if the secret actually lies in a very specific, highly structured approach to how you operate both behind the screen and on it? Let's break down exactly how this methodology gets us to that elusive, stress-free state.
Okay, let's dive right into this with Pillar 1, the internal game.
Look, before you ever open a chart, draw a trend line, or execute a single trade, you absolutely have to win the battle happening entirely inside your own head. Think about the contrast between emotional trading and organized trading. Emotional trading is that destructive chaos most traders just naturally default to, acting on the fear of missing out, revenge trading after a painful loss, or just pure, unadulterated greed. It's exhausting and it's wildly inconsistent. On the flip side, we have organized trading. As the source material highlights, being organized is the ultimate goal here. It's about approaching the market not as a gambler at a casino, but with a structured, calm, and incredibly methodical intent.
The source material actually hammers home this specific phrase over and over: emotions, emotions. And they repeat it for a very good reason. It completely highlights the cyclical, chaotic loop that derails most trading success. You know how it goes, right? One emotion triggers another. Panic leads to a premature exit, which leads to immediate regret, which then leads to a hasty, ill-advised re-entry. It's just a continuous, loud echo chamber in a trader's mind. So that repetition of emotions in the source is a stark warning about the mental noise that totally prevents clear, logical decision-making. So how do we actually quiet all that noise? Well, the source points us to a really fascinating concept, literally termed emotional organizations. Actually, take a second and think about that phrase. We usually think of organizations as, businesses or institutions with strict rules, rigid hierarchies, and protocols. Applying that exact concept to your own psyche means you're building a structured framework for your feelings. Emotional organization is the required antidote to the chaos. It means your responses to winning and losing are pre-planned, they're regulated, and they're managed efficiently. To actually achieve this state, we use a very specific tool called the negative checklist. Now, what's really interesting about this concept is how it acts as a vital circuit breaker. This checklist forces a hard pause before your money is ever at risk, effectively bridging the gap between chaotic emotions and organized discipline. Usually checklists are positive, right? Do this, check that. But a negative checklist is a filter of things you absolutely must deliberately avoid. It's a rapid-fire interrogation of your own motives. Ask yourself, am I trading purely on a sudden impulse? Am I secretly planning to ignore my hard stop loss? Am I staring at the chart just forcing a setup to appear because I'm bored? If you answer yes to any of these, the trade is dead in the water. Here is the exact step-by-step procedure for using this checklist in real time. Step 1. You acknowledge you're feeling that emotional impulse to jump into the market. We all get it. Step 2. You immediately consult the negative checklist to filter that impulse. Step 3. You only proceed to the next phase of your trading process if, and literally only if, the checklist is completely clear. This simple 3-step process is exactly how you actively neutralize those emotional pitfalls right in the heat of the moment.
Let's move to and see how this builds into Pillar 2, the external game. Okay, so your mind is now quiet and organized, which is fantastic, but now we shift our attention outward to validate our mindset with hard market data. Just because your mind is organized doesn't mean the market is just going to magically hand you money. The core foundation of the external game is that a successful trade absolutely requires strict technical proof to proceed. A calm mind might keep you out of bad trades, sure, but it takes objective, technical evidence to get you into a good one. We just cannot rely on a gut feeling, no matter how serene or confident that gut feeling might be. We need the charts to speak to us clearly.
And the source points directly to candlestick confirmation fundamentals as your very first layer of technical proof. Whether you're trading a massive engulfing pattern or a sharp rejection pin bar, the key is waiting for that visual confirmation of buying or selling pressure before you ever hit execute. It is the absolute baseline requirement to ensure the market is actually aligning with your trade idea. Then, the final piece of the external puzzle highlighted in the source is looking at divergence results. Rather than just blindly tracking price, divergence acts like a powerful lie detector for the market, highlighting exactly when underlying momentum violently disagrees with the current market structure. Combining those candlestick fundamentals we just talked about with this divergence data, that gives you a seriously robust technical edge.
And this brilliantly illustrates the exact balance we're aiming for at the precise moment of execution. We want our raw emotional impulses actively minimized and pushed down as low as humanly possible through our internal organization and that negative checklist. At the exact same time, we want our technical confirmation, derived from our candlesticks and divergence, to be incredibly high. A truly stress-free trade lives right in this specific sweet spot, incredibly low emotion and extremely high technical data.
So, to wrap up the core concept, emotional organization plus technical fundamentals equals stress-free success. It's really not an accident. It is the direct result of combining the internal discipline of emotional organization, which you achieve via the negative checklist, with the external, completely objective validation of technical fundamentals like your candlestick patterns and divergence. You truly, absolutely cannot have long-term success with just one or the other. They are two halves of the exact same winning methodology.
Which brings us to our final thought for this explainer. I want you to honestly evaluate your own methodology the next time you sit down to trade. Ask yourself, does your current setup actually survive the negative checklist? Are you genuinely emotionally organized, or are you just kind of pretending to be while emotions secretly run the whole show? Implement these two pillars and just watch how rapidly the stress leaves your trading. Keep learning, stay focused, and I'll catch you in the next explainer.